Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investors International Limited. Here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. An indecisive doji cross yesterday for low, right on the key supports around 117 even, notably the lesser 38.2% Fibonacci line of the March 2020 to January 2021 move at 116.94. The neckline, currently 116.95, of the August to September 2020 shoulder stop, and the famous low of late March this year at 117.02. This is now a serious, if still indecisive, attempt at this previously strong support level. Further below, and also moving away, is the upper trend line, currently at 116.59 of the recent descending wedge pattern. This had added further support last week, but has moved too far away lower now, which may be why we've had this move further down. Now, so far today, yet another further move lower, though the support in the 117 even area and, well, through the support 117 even area and down towards the old upper trend line, shying away from really testing it just yet. This is now the lowest we've been since November last year. Cable. A reactionary bullish white soldier yesterday. You could possibly call it a bullish harami, but I think that would be pushing it a bit too far. The top side would nevertheless capped by the rising long moving average, currently 137.94. We do still, I suppose, have support stroke resistance in the 137.50 area, but it seems the next real support will be down in the 136.5 area. I still suspect that this pair may have even more room on the downside. So far today, another move lower, through the 137.5 area, but not as yet really approaching the 136.50 area, though it's getting closer. Euro sterling. A bearish harami yesterday as the market tried to punch up with an attempted close over the key bearish driving force of this market. And that's the May to day based bear channel, currently 84.38 to 85.25. It tried, it pierced it, but ultimately failed to close over the upper bull channel line. Within the bear channel, in this bear channel, we have the support at 84.70 from the old March low, and also recently, and somewhat surprisingly, from the short moving average, currently at 85.06. Meanwhile, the resistance above the upper bear channel line is the slowly declining short medium moving average, currently 85.52. So far today, a reactionary pushback up from the short moving average once again, and through the upper bear channel line. We're not yet testing the short medium moving average, but we're approaching it as well. US dollar against the Indian rupee. An indecisive spinning top yesterday, which could also be seen as a bearish harami. I'm inclined to view it more as an indecisive action rather than a bearish one. Otherwise, I give it the moniker of an immediate countering action, which I'm not quite comfortable with. The base of the action was on the old 50% Fibonacci line of the February to April 2020 move at 74.26, with a strong rising support of the short medium moving average below, currently 74.19, and a gently rising medium moving average, currently 74.01, below that. Overhead, we have resistance at the lesser Fibonacci level at 74.46, but the heavy duty resistance is up at the 50% Fibonacci line of the April 2020 to February 2021 move at 74.63. I suppose these moves are a follow-on to my comments earlier this week and late last week about how the market seemed unsure about staying that far below the significant 50% Fibonacci level at 74.26. That being said, I've still left on the daily chart the initial downside target for this ascending broadening wedge pattern in the 74.05 area, even though it was achieved 2 weeks ago. We also still have a further secondary target X1 in the 73.80 area. That's untouched as yet, though I have had doubts in recent days about whether we'll reach it as part of this cycle. So far today, another basing action on the 50% Fibonacci line at 74.26 that has pushed higher and looked like a bullish engulfing pattern at this particular moment. US dollar against the Brazilian real. A third bullish white soldier yesterday, and an important one, as it was a second consecutive close over the medium moving average, currently 525.44, and the first close clear over both the long moving average, currently 532.20, and the recent highs in the 530 area. The significance of this is that this may be the signal that indicates the market has answered the one question I've been pondering here now for weeks. Is the move up since late June purely reactionary, or is it the beginning of something else? You see, there have been arguments for the late June today action becoming a possible triple top, or conversely a bullish halfway hesitation. If this move up proves to be true and not false, then we have a bullish halfway hesitation. In which case, and it may be a bit early, but I have initially placed a target X in the 546.20 area on the daily chart. All this is in the shadow of the remarkable number of dead crosses we've seen here since late May. US dollar against the Mexican peso. A bullish closing white Mariposa, just about, though it could be seen as a hanging man pattern as well. Now, hanging man patterns are usually seen as bullish. The base of the action was, surprisingly, on the short moving average, currently at 1995.53. But the most interesting feature was where we closed, well over both the flatlining short medium moving average, currently 1998.24, as well as the nearby declining medium moving average, currently 1998.53. This was clearly another attempt, much as we saw last week and also 4 weeks ago, over these resistances that are now supports. Overhead, we have the flatlining long moving average, currently at 20.0996, and the 2021 downtrend, currently at 20.2188. I'm not that impressed by the downtrend, but the long moving average has been solid resistance, but on a closing basis. If they are broken, then the next key topside resistance is the 2021 50% Fibonacci line at 2058.49, with the nearby lesser 61.8% Fibonacci line at 2060.62. These two put paid to the rally we saw back in June. So far today, a further significant move higher over the long moving average, but not quite making it up to the downtrend. Thank you for listening. This short version broadcast gives the essential market plans and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Tofpik and ADM Investor Services International Limited. And here comes the final bit.